4 questions the business broker is going to ask you when you're buying a business. 1, how do you plan to pay for this? Now, you should have a good answer for this, and it better not be 100% seller financing. You should be able to say how much you plan to put down and already have a lender lined up that you plan to work with. Now, you might run into some barriers because most brokers don't understand the SBA loan market at all. They think you need to bring 20, 30% down or have a lot of personal collateral. Now, the true SBA requirement is 10% down, but if you structure it right, 100% of that could come from the seller. If you get the seller to give at least 10% of the deal on a seller note on 24-month standby, or if they maintain 10% of their equity. But banks typically won't do 0% down unless you're buying a company that you work for. In most instances, 2.5% is the minimum, or 5%. So 2.5% if you have really strong industry experience, management experience, sales experience, 5% in most other situations. Now, a pre-approval letter can help in this instance. You can show that even though you only have 2.5%, that the bank is willing to lend a certain amount to you. Number 2, they're going to ask how much seller financing you're going to ask for. Now, we typically make sure that every deal has at least some seller financing. You shouldn't come into a deal expecting the seller to do all seller financing. The answer to this question at the beginning is that usually you say you're going to ask for between 10 and 30%. And usually I say what's going to determine that amount is essentially how tied to the seller's relationships the sales are. So if the owner is very involved in sales, then we're going to have to do a big seller note to incentivize them to make sure that those relationships are all transferred to you, the buyer. If the sales have basically nothing to do with the seller and their relationships, then you can probably feel more comfortable at the 10% level. Number 3, what is your relevant experience? This is another one. You need a good answer for this. You should only be inquiring about businesses that fit your experience and background. If you start inquiring on businesses that don't fit your background, you're going to very quickly get labeled as a tire kicker and you're going to get locked out of the market. So then when a deal that does come along that's perfect for you, they're not going to answer your call. They're not going to respond to your emails because you already have the tire kicker label. So make sure the business is a good fit for you and that you can clearly articulate to the broker why this business is a good fit for you and why the broker should let you on to the next level. Because remember, you are interviewing for the privilege to speak to the seller. Number 4, why do you want to buy this business? Again, your reason should be related to this specific business. It shouldn't be that you want more cash flow. It shouldn't be that you're an investor. It shouldn't be that you want to buy a business. It needs to be why you want to buy this business. You're trying to win them over. You're trying to sell them on moving you to the next level. And make sure you don't do anything in this process to get yourself labeled a tire kicker because you will be permanently locked out of that market. And that's why working with someone like us can really help. Brokers know that we bring buyers that are good fits for the business that we're looking at, that we're not going to waste their time on a business where our partner isn't a good fit. And they also know that we get deals done, that we can get things closed so we can get our names moved to the top of the pile. So if you want to buy a business with us, check out the link in our bio, fill out our form, and apply for our partner program.